the devil's in the details on all these things, whether it's Russian oil sanctions or sanctions on Iran or sanctions on Venezuela. You can say one thing, but do quite another. And that's exactly what they've done.
My name is Mike Mauceli, and this is the Energy Show with REI Energy, where we're energizing your investments and maximizing your tax deductions. Today, we're going to be talking about $100 oil, and you're going to discover how rising Middle East risk and increased global demand for oil is keeping prices high. My guest today is Dan Kish. Dan is the Senior Vice President of Policy at the Institute of Energy Research. Well, Dan, it's great to have you back on the show again.
Thanks, Mike. Great to be here.
Yeah, there's a lot of information going on out there. And of course, you have a lot of investors and other people now looking at this potential $100 barrel oil. And I guess what I wanted to try to get across today is, if we do hit $100 a barrel, what is on the horizon out there that would bring prices back down? And how long do you think it would last?
Yeah, great question, Mike. Well, JP Morgan and others have now said that we could potentially be looking at $100 barrel oil. I'm a little afraid of the options available to the Biden administration because they would do nothing for enhanced domestic production, which is essentially we're the world maker at this point. We're the price maker. We're the biggest dog in the hunt. And he's been pressuring on the federal side, the waters and Alaska and others. And the only thing available to him at this point is the SPR, but unfortunately he's drained about half of the SPR out. And the quality of the oil in the SPR is more is better suited for export to people whose refineries are tuned to take that stuff than the heavier crudes that typically feed our refineries and that our refineries are permitted for. So he may dip back into the SPR, but he can't do a run like he did last time before the last election, which was about 250 million barrels. It just doesn't have that accessible and easily accessible for our refining capacity.
Yeah. And that's been their policy all along, right? Is they've wanted to drive oil prices so high that people would eventually embrace electric vehicles. Well, it looks like that's not happening now. And of course, I don't think they envisioned that there were going to be several wars around the world that was going to cause prices. I don't think this was the $100 a barrel he was looking for. Do you?
No, I don't. And well, I don't think so. Sometimes I can sit around wondering whether this is all on purpose, but I won't go there. There is the reason I say he may go to the SPR is because we've heard tough talk about Venezuela putting sanctions back on Venezuela because they've been breaking every line of the agreement that they had with the administration. But honestly, don't expect that because it's really the devil's in the details on all these things, whether it's Russian oil sanctions or sanctions on Iran or sanctions on Venezuela. You can say one thing, but do quite another. And that's exactly what they've done. I mean, Iran sanctions are also included in the bill that passed the Senate yesterday, but they're not going to be enforced. Essentially, China's been, I just saw a chart of imports of oil from Malaysia. And for the last 6 months, Malaysia's been exporting more oil to China, double the amount of oil to China that they actually produce.
Wow.
So they're getting it from somewhere, and you can all take your bets on where that might be.
Yeah. No, I agree with that. And, I mean, as far as just, their policies overall, and like you said, there's not enough oil left to really affect the election or to be able to drive prices down. And if they did drive prices down, I mean, it's only because there's an election year. That's not because they want them to go down, correct?
Correct, correct. Because ultimately the goal is to make it more expensive. That's why he's doing all the things that he's done. I mean, last week it was 13 million acres. You can't even drill in a petroleum reserve now. Up in Alaska,
Yeah.
he pulled 13 million acres out of NPRA. I've been there a number of times, and it's a perfect place to produce oil.
Was that Willow
Just on the other,
project?
I'm sorry.
Was that Willow project that they had approved?
Yeah, the Willow project still goes forward, although who knows what judge might throw a wrench into that at any point in time. But it's amazing to me to watch the press on that one because, it's 180,000 barrels a day at peak uh, production as planned. And uh, we have we have offshore rigs in the Gulf of Mexico that gathering rigs that uh, have more production than that. So the idea that the Greens use this as a argument that he's got to give us something else because he gave away the store in Willow is absurd. Uh, it's not a humongous project in the scope of things in Alaska terms or in the Gulf of Mexico terms. Uh, it's not that big of a deal. They just put pressure wherever they can, and then he gives them something else in return for the pressure they give him. So.
Well, I think a lot of people don't realize that we use about 22 to 23 million barrels of crude a day here in the United States. And I guess worldwide, I mean, we use over 100 million barrels a day. And I think last week I read, I guess we're producing somewhere close to 13 million barrels a day. That still means we're importing about 37% of our crude from these overseas. And I guess, since these wars have now started going on, that's been one of the major drivers. So if I'm an investor and I'm trying to figure out, okay, well, price of oil goes up. I mean, as I said, what is really out there that's going to be able to turn it around? Because here in the US, I mean, we can say drill, baby, drill and all that, which I'm for that 100%. Obviously, I'm in the oil business, but we're already producing at record rates. So I don't, if prices go there, I don't really see there's a lot out there in the next couple of years that's going to be able to turn that ship around.
I think you're absolutely right, Mike, and that's why we're getting these predictions of increasing oil prices. We're looking at demand. Uh, just reading about uh, Vietnam and how they're demanding more coal production because they're worried about hydroelectric and all of Asia is worried about hydroelectric this year, which means they're going to have to burn more coal. Well, if you're going to burn more coal, it also means you're going to end up burning more oil and natural gas to fire electric generation, which means China's in the game, which means all of these things. And yet, you know, with Biden's ban on exports of LNG from the U.S. or a stop to the pause to giving licenses going forward, the building that should be taking place right now in order to meet that demand is not taking place. And of course, the people who actually produce are not drilling the wells that they would in order to prepare the stuff for the future. This isn't rocket science. This is just planning, which the government doesn't seem to do at all. And I just want to point out that by knowing how many barrels of oil the world in the United States consumes per year, as you just demonstrated, you ought to be the next Secretary of Energy.
I've been making a lot more money in the stock market, right? It seems like
Yeah, good point. I hadn't thought of that.
Seems like that's what they do. They get in there and they start trading stocks, right? And they all become very wealthy.
Just amazing. Just amazing.
But anyway, yeah, there's a lot going on around the world right now, and a lot of the stuff that I read in some of your articles that I've looked at. I mean, you talk about the Red Sea, you don't really hear a lot about that, but I mean, that's where all of the exports are coming from, right? So, and
Yeah.
it seems like Biden and them aren't doing a lot to protect that, are they?
No, and what's most amazing about it, and of course we've got all this tension in the Middle East going on right now. But I try to explain to people, if you take a ship that typically takes I don't know, let's say 10 days, 11 days to get to market, and now the route it takes 22 days to get to market, it means you have half the ships available to move because they're just burning up fuel, uh, cruising, and and that has also had a significant impact that puts upward pressure because the supply lines. It's like having a pipeline uh, that whose throughput is cut in half. Um, you're going to get half the oil, and these things are slowly building up as this instability continues with no end in sight, so far as I can see.
So, I always have a lot of people ask, and how do you predict what prices are going to do, or what you think prices are going to do? And I always turn kind of to OPEC or OPEC plus and say, well, they may, we produce more oil right now, but when it comes down to it, they still control the prices. I mean, as far as how much oil they can deliver, and whether they're going to cut back on oil. And so when you look at some of a country like like OPEC, I mean, where would they like to have the price of oil at, you think?
I, about 99.99 a barrel. I think that's roughly their sweet spot. Um, Obviously, these countries that live primarily off the price of oil um, would like to have a sustained. They don't want the prices too high because
Yeah,
that'll eventually hurt demand and
right.
the economies of all the countries that use it. Um, so I think right around $100 a barrel.
No, I
Uh,
think I agree with you. I think that, when you break that $100 a barrel mark, then people start really, thinking about it, because obviously they hear about it every day on the news. I mean, as long as it stays between that 80 and $100 a barrel, I mean, people, they don't like it, but they can live with it, right? So it's just kind of a point when it hits $100 a barrel.
right, right. It's a psychological point and a pretty significant one. So we'll see where this heads. But right now, things just, last year the U.S. had a BAFO year. We did more increase in production to our output. That isn't going to happen this year. People have, especially on the gas side. If you look at what the LNG prospects have done to the price of natural gas, it's
Yeah.
what is it about? I
Dollar
think I use a
75,
reference.
dollar.
Yeah, I use a reference point. I mean, in terms of energy, it's about 6 to 1.
Oh,
It
okay.
used to be,
Yeah.
it used to be if price of oil was $60, and a lot of these gas prices were pegged to that as well. That's been broken largely because of the tremendous output of the U.S. But if gas is $2, the equivalent price of oil would be $12 for the energy equivalency. So, you're going to use as much natural gas as you can when the price is where it is now, and and people will stop drilling at some point. You just kind of stop drilling. If it's associated gas that goes with oil, that's one thing. But if it's strictly gas, it puts downward pressure on it. And that's what they've done with the LNG pause.
Hmm. Do you think we're going to lose market share to some of these other countries with LNG since they've
Oh yeah,
canceled?
oh yeah. I mean, they've already Qatar has already announced increases in um, investment in more export facilities. You've got the UAE is talking about it. Everybody's looking to fill the gap left by indecision here in the United States.
Yeah, it's just amazing how that, how incompetent some of these people are we have in government. But like you said, it's probably all planned. I mean, I'm sure they're not that stupid. It's just that that's the policies they have.
Right. Well, and ultimately their goal remains the same as the president stated 4 years ago when he was running, which is to end the use of fossil fuels. And sometimes you have to believe what they say.
Yeah.
Uh, uh,
I agree with
Other
that.
times you can take it or leave it, but you know.
Well, we were talking about the SPR, and Biden recently came out and says he's not going to refill it now because prices are too high. So, I mean, is that is that all planned, or is basically he doesn't want to cause prices to go higher, right?
Yeah, well, he's in a box. The prices have been lifting because of these geopolitical things that have been happening, and they had plans to buy 3 million here and 5 million there and
Mhm.
the like, but they've had to put a halt to it because the prices crept up above their acceptable price. But you know, back when the price of oil actually went negative, we were at $20 a barrel for a while during COVID. We had an opportunity to fill that SPR, which would have helped our domestic producers by giving them a market to
Yeah.
produce that oil, and we would have gotten it on the cheap. Now it's 4 times as expensive as we were talking about buying it at the time. So
I think Trump
uh,
filled it up during COVID, right? When prices were down to $20 or $30 a barrel.
he tried to. Uh,
Tried.
he tried to. Senator Schumer from New York stopped him from doing so,
Oh, wow.
uh, saying that it was a giveaway to industry. So actually, it was a giveaway to the American public now in hindsight, but hindsight's 2020, and there's a lot of hindsight that goes on in Washington.
Yeah. Yeah. I agree with that. And so when you look at kind of where we are today, right? I mean, as far as that, where prices are and, where the administration is going. Of course, we're in an election year. So, I mean, obviously they're all pro oil now as far as trying to get prices down. But if they do get reelected, I mean, we're going to see some pretty hard times in the U.S. regarding energy going forward, aren't we?
Oh, I don't think, huh, I think people would be absolutely shocked at the uh, at the plans they have in place. I mean, there was a lot of talk this week and last week about possible declaration of a climate emergency, which would give them the sorts of powers that they had during COVID,
Right.
um, which could literally, for example, I mean, it could include such things as shutting down exports of oil from the United States. And as you know, Mike, it's kind of hard to explain on a bar stool or something, but when people are talking about this. But the truth of the matter is, we get increased efficiencies by exporting grades of oil that aren't suitable for our refineries.
Right.
The sort of stuff that we've actually got in our SBR right now, and importing from Canada and from other places oil that's more suited to ours, and the same for them. Everybody benefits. That's how that's how the system is supposed to work. When you trade things, people are supposed to benefit based on the value of the various things. So,
A lot of
uh,
people don't realize our refineries, they're set up to process heavy crude, right? Or heavier crude. And then of course, when we get crude like from the Bakken up in North Dakota, which is a very high gravity crude or very light crude, you have to mix that with these heavier sulfur enriched crudes to, obviously to refine it, correct?
Exactly. And all that costs money and
Yeah.
reduces efficiencies and all the rest. And so ideally you get sources of oil that meet the and of course the next logical question is, well, why don't you just change the refineries? Well, given the way the EPA looks at these things today, you can imagine what it would be like trying to get a permit to change your refinery to take this other oil, despite the fact that over the long run, they'd basically treat it as a totally new unit under something called uh, the what's it called? NPS, I think, or NPR. Uh, they treat it as though it were a new refinery, even though you were just simply adjusting the way the refinery works. And that, of course, would entail years and years of uncertainty about whether or not you can make the changes anyway, and billions of dollars while you're waiting. So,
Yeah, and who's going to want to commit $10 billion to, when they don't even know who's going to be in charge and what their policies are going to be? I mean, it's kind of ludicrous for a company to go out there and try to invest that type of money or make that type of commitment because, like you're saying, it may be 10 years down the road before they even get a permit.
right, right, and that's been the dilemma. The head of Chevron earlier this year said that he didn't see any new refineries being built in the United States
Yeah.
because nobody's going to lay out the money and the exposure when you've got such political uncertainty. I mean, you've got basically people trying to put you out of business, and you go to them and ask for a permit. What do you think the chances
Yeah.
are?
Well,
So,
I think in the long run, I think that prices are going to stay high. I don't see anything like you. I'm like you out there on the horizon that believes that they're going to go down. Even if we started drilling tomorrow, as you were saying a little bit earlier, I mean, it takes planning if you're going to try to implement, a lot more rigs and produce a lot more oil. Now there is new technology coming about, I think I was reading where Exxon, they're saying they've developed a new fracking technology where they're able to go in and refract some of these older wells for, a couple of $1 million, where compared to a new well, it's obviously $9 million, but they claim they can get as much oil out of an older well as they could a new. And I know, us being up in the Bakken, I mean, we participated in a lot of wells up there, and there's companies up there that are doing 200 to 300 refracts this year. So, that technology is starting to move forward. So I think that from that standpoint of it, I think we can see, more oil coming into the market. But again, with us only producing 13 million barrels a day, we're certainly not going to change the prices, right? Even if we can produce more here in the United States.
right. I don't know if I've shared this before, but we looked at the production increases. The United States by itself between 2010 and 2019 increased the marginal increase in oil production in the world. We were 81% of it.
Wow.
And when you add Canada to that, another 9%, it's 90%. So North America supplied 90% of the marginal world oil. Can you imagine what the price of oil would be in the absence of that fracking technology and the blood, sweat, and tears and a lot of work that went into it by our Americans on the ground? Uh, and this all comes from a country in which we've drilled more wells in the United States
Yeah.
than the entire rest of the world combined since the first well in Titusville back in 1857. And so you would think that, this thing has been plugged so much that we would have gotten every last drop out of it. That's the theory from people who know little about geology and the rest. But in reality, we just keep finding more. And we're about to release fairly soon and the inventory of what those numbers look like, how many years of oil based on the government's own estimates of how much is there and how much is producible can be produced, and they are stunning, stunning.
Yeah.
We're not running out of oil. We're running out of political will to allow Americans to benefit from it.
Well, you said it right there. I mean, we seem to be, technology continues to improve, and America is always at the forefront of pushing that technology forward for the rest of the world. And yet we've got politicians that, obviously, whatever the fact is, whether they're getting paid off or they just, or believe all this climate stuff that they're talking about. I mean, it's just ridiculous. Well, Dan, it's great having you on the show today. Can you tell our listeners how to follow you?
Sure. The best way is instituteforenergyresearch.org.
All right. Well, I'd love to have you back again in the future when you release that report.
Thank you.
Thanks.
This podcast is a presentation of Rich Dad Media Network.